There's a report of mortgage delinquencies increasing nationwide and including Arizona. So what is going on with that? We're going to take a look at that today. Plus, we are seeing inventory start to go down, which is somewhat of a reversing trend. How is that going to impact the market? We will get into all of that today. Thanks for joining me, you guys. Home mortgage delinquencies rise nationwide, including Arizona. So this is according to the Phoenix Business Journal. They are saying that people are falling behind on their mortgages, and it's increasing across the nation. Arizona is not one place that is being missed by this. Arizona isn't among the top 10 states with the highest delinquency rates, but they are increasing in the state by 0.12% over the last year. And we're going to take a look at what this looks like in terms of our notice of trustee sales here in Arizona. But this article is saying that rising property taxes and insurance payments are eroding the promise of long-term stability in home ownership, especially in states vulnerable to natural disasters. Again, Arizona not being one of those, Florida, however, being one of those states. But they're saying that the average escrow payment, which typically covers taxes and insurance, rose 62% in the last 5 years. And that's in addition to the mortgage, which we all know mortgages have also risen in the last 5 years because of prices and interest rates. And so during the first quarter of 2025, the property tax delinquency rate, where homeowners were at least 1 month behind on payments, were at the highest point nationwide since 2018, according to this study. And Mississippi has the highest overall delinquency rate. Now, they say Arizona is less prone to natural disasters, as we all know, keeping that state off the top 10 list with the highest change in year over year of serious delinquencies. However, that said, we are starting to see a little bit of an increase. They're saying people who purchased at the top of the market might be upside down. A group of recent buyers could be in a tight spot. Referencing that median sales prices are still about 7% below the peak that we saw in May of 2022. So if you are someone who purchased around that time frame, it's likely that, your home value may not be as high as it was when you bought it. Therefore, you may be upside down. And if that's the case and you need to sell, that can cause some problems. We're also in a situation where you all know homes are taking longer to sell. There's more competition out there amongst sellers than there was even a year ago. And that puts a lot more pressure on sellers to start to bring down their prices in order to get the home sold. Now let's look at what the Cromford data is saying about our notice of trustee sales. And as a reminder, in Arizona, you get a notice of trustee sale and you have 90 days to come current with your bank, with your mortgage payment, before you actually go into a true foreclosure and go to auction. And so this is those initial notices of trustee sales. And you can see this has, increased, and you can definitely see a trend of a little bit of an increase, but it's nothing that I would say is too significant. Obviously, from June of 2021, as we got into 2022, is where we really started to see this change, which makes sense. This is when interest rates increased and the market completely slowed down. But I'm not seeing a significant jump in any of this. Of course, it looks stark when you're comparing from like zero to actually having something on the board. There's going to be a pretty big change year over year. Now, if we go back to like 2014, we can see, what 2014 numbers looked like in comparison to where we're at today. And then, of course, if we go back to like 2009, 2008, this really changes the view of seeing where these notice of trustee sales were at that time as compared to where they're at today. So is it something to worry about? I don't think at this point. I think it's natural that we're going to see an increase in all of this, but it is something to keep an eye on. Now, according to Redfin, pending sales fall and U.S. home prices hit another record high. So we're seeing fewer sales, but prices continue to increase. What the heck is going on? They're saying pending sales fell 3.5% year over year in the 4 weeks ending July 6th. That's the second biggest decline since early February. The median U.S. home sales price hit a record of $399,633, up 1% year over year. Now, there's of course been a lot of doom and gloom out there for sellers, but This is definitely an encouraging sign for sellers. Mortgage purchase applications rising 9% from a week ago. I talked about this last week where we are starting to see that trend in mortgage purchase applications increasing. We've seen that for a bit. And they're also saying that the touring activity is up 25% from the start of the year, as well as Google searches for homes for sale is at the highest level in a year. So is demand starting to pick up? I'm not entirely sure that we're there yet, but there might be, just some signs of life out there. Now, one thing that I will say, just anecdotally speaking, our team has been working with a lot of buyers out there. And over the last week, we've had 3 buyers that have been in a multiple offer situation where there's been more than one offer on a property that they're interested in. So that is still taking place. If the property is priced correctly and if it's in a good location, also is maintained well and or updated, all of those factors, that is still happening. And I didn't expect to see 3 of our clients in that situation as of late. So that might be a little bit of evidence from what they're saying and what I was sharing last week about these purchase applications increasing. Maybe demand is starting to turn a bit of a corner. Now, they say that pending sales fell 3.5% year over year. I know that's pending sales, but let's just look at our sales rates and how we're doing this year compared to last year, because we all know that number of transactions has been low the last few years. And I think it's interesting to see that we have outpaced last year, which is good because last year was the lowest of the low. And we started on pace with last year and then broke through in April here, it looks like. And we've started to keep and maintain this trend of being higher than we were in 2024. If we put 2023 on the board, you can see we had higher sales then in 2022, of course, 2021. So last year was a pretty rough year. We didn't think it could get worse than 2023, and it did. So thankfully, we're breaking that trend a little bit. And that's just evidence that there are still people transacting, regardless of prices, interest rates, your ability to sell your property, all of those things combined. There are still home sales happening, people buying, people selling, because it's something that is a necessity. People will always have to move, even if it's for reasons that they don't like. So I mentioned that inventory has been going down, and we have been talking about how inventory has been increasing all year long. Let's take a look at what's going on. Before I get there, if any of this is helpful for you, consider subscribing to become part of our community going forward. According to HousingWire, housing inventory actually fell last week. What is going on? They're saying new listings took a major dive as well. So in the 2 weeks leading up to the July 4th holiday, the tracker showed that housing data was stabilizing. Mortgage rates had approached their lowest levels of the year. But things did get a little bit messed up with the 4th of July holiday in terms of data just not being completely normal. So what they're seeing now is that there had been an increase in inventory and slowing growth rate of home prices nationally. However, the previous week showed stronger growth than the usual trend. We can expect a return to normalcy starting this week, according to HousingWire. So the weekly inventory change, inventory fell from 853,000 to 846,000. This is national. The same week last year, we saw inventory actually rise from 645,000 to 652,000. So you can see just, in those numbers comparing year over year, how much more inventory we actually do have this year. However, we don't typically see a declining trend at the moment. They're also saying that the new listings data has seemed to reach its peak for this year. They wanted to see at least 80,000 new listings hitting the market per week during the seasonal period. And they did achieve that target, but that has started to dip as of last week. They say, to give you some perspective, during the years of the housing bubble crash, new listings were soaring between 250,000 to 400,000 per week for many years. And we've just been struggling and hoping to hit at least 80,000 a week this year. Now, if we look back at 2024, it was 56,000 in terms of new listing data every week. And then 2025 has been trending around 60,000. So we are up this year as compared to last. We're just seeing kind of this dip over the last couple weeks. Now, that is also reflected here in Phoenix as we've been tracking. So our active listings had been climbing all year long. Then we started to see a little bit of a level off. And then a couple weeks ago, actually saw a pretty big change week to week of much fewer listings on the market. And that's kind of held steady. So again, as I said last week, I think we're going to continue to see this taper off a little bit as we get through the rest of the summer, and then might start to see an increase as we get into the fall. So what this does mean for you as a seller, though, is less competition on the market. So if you're one of those sellers who's been on the market for quite a while and you are wondering if there's going to be a break at any point in time, it might be coming. Now that we have fewer listings on the market, you might have a little bit more of an opportunity to be seen. And in addition, we talked about some of that kind of rising demand potentially, just at least anecdotally speaking, and kind of knowing what's going on in the market. Maybe you'll start to see a little bit more interest on the buyer side if you're hanging on. Now, alternatively, there's a lot of discussion going on with what is going to happen with the Fed, with mortgage rates come September in particular. And if things start to shift in September, meaning if Jerome Powell is no longer the Fed chair and is replaced by someone that Trump would like to be there, there is a good possibility that rates would be cut. And if that happens and it affects mortgage rates, we could actually start to see a lot more increase in buyer demand. So the other solution that I'm putting out there for you as a seller is going off the market, resetting your days on market for the rest of the slow summer months, and coming back on market in the fall when potentially we'll have more demand. Now, none of that is promised or guaranteed, but just something to kind of noodle on based on the situation that we're in today. If you've been considering your home and you're just curious kind of what your home's value could be, check the description below. I have a link for an instant home valuation. So speaking of Jerome Powell, what is going on here? What's Fed Chair Jerome Powell's next move on rate cuts? Jobs, inflation, and new trade war deadline could be influential. So this article by HousingWire is kind of breaking this down a little bit, going on to say that in the last few days, we've seen the surge in government employment in the jobs report and news on the trade war. All of this has given Jerome Powell a little bit more data to consider for future rate cuts. But it seems like the Fed is kind of playing it safe this year so far. And it doesn't seem like they're planning on cutting rates anytime soon. The next decision will probably come in September. So we'll have to pay attention to see what's going on. There's also a lot going on with Trump calling for Jerome Powell to step down, wanting to replace him with someone else. Trump wants the Fed to cut rates. So just a lot of moving parts right now. And again, as I always say, none of this affects our mortgage interest rate directly, but everything that is talked about as it relates to the federal funds rate, the bond market, 10-year treasury, all of that ends up impacting where we stand with mortgage rates. So according to Mortgage News Daily, all eyes are on CPI. What they're talking about is we will get CPI news. You guys will probably have that by the time you actually see this video, but that could make an impact on what happens with mortgage rates this week. Where we stand so far is about 6.83% as of today. And we did see some significant movement downward, and then things ticked up a bit last week with some of the news out there. So still under 7%. We're just not at that 6.5% or trending towards that 6.5% as everyone had hoped. Now, of course, if you are a buyer who is looking to avoid these types of mortgage rates, consider the option of assumable mortgages. Our team has been helping a number of buyers purchase with an assumable mortgage. And while they are somewhat few and far between, there are some opportunities out there. So check the description below. There is a link there where you can search homes with assumable mortgages or set up a discovery call with our team to talk more about how that process works. Now, the Cromford Market Index, what we're looking at every single week, is showing indeed that supply is coming down. This was at 108 not too long ago. Our demand index at 76.1. So demand is still below our normal range. It's about 24% below normal. But we are seeing the supply start to come down and get closer to meeting that, although not quite there yet. But the overall index is at 72, which puts us in a buyer's market across the valley. Anything under 90, according to the market index, is a buyer's market. Now, if we look at every major city, for the first time, we are now seeing Paradise Valley being the only seller's market we have in the entire valley and gaining strength month over month. And this is really because the amount of inventory in Paradise Valley has gone down significantly because it is the time of year where those luxury sellers take their homes off the market if they haven't sold. Now, Chandler, Fountain Hills, Glendale, Avondale, Phoenix, going all the way down to Mesa. All of those are in a balanced market, although some are seeing some deterioration getting closer to a buyer's market week after week. And then everything from Gilbert down to Buckeye is technically in a buyer's market. You'll notice there are a few green arrows this week. The last couple of weeks, all we've really seen has been red, but Goodyear made some moves in a direction towards a seller's market. Cave Creek did as well, and so did Glendale, and then of course Paradise Valley. But that being said, all of those are still pretty far from any significant seller's market. They've just, kind of seen some movement in that direction over the last month. Now, the average change in the CMI for all of these cities month over month was negative 0.8%. Which is so minimal. We really didn't see too much movement month over month this week. So we'll have to keep an eye on this, but it does seem like the trend of a deteriorating market is slowing a little bit. And I think that really is because we've been seeing our active listings start to go down. And I think some of that demand might be creeping back up with some of the rate decreases that we saw over the last month. Now, last week I was talking a little bit about our rental inventory in the Phoenix market and how much it has increased even since April. And it's interesting because Redfin just came out with an article talking about how asking rents have declined for 4 months in a row. They're still only $63 below their record high, but asking rents have started to come down. So we are seeing that here in the Phoenix area as well as our inventory has been increasing in terms of rentals. And so it's interesting to see that this trend is also taking place in other areas of the country. They say specifically Austin is seeing a pretty big hit in terms of their rents falling the fastest, and Minneapolis is the other place that is seeing that. Now, Phoenix does make this list here as well. We're seeing actually a negative 2% change. This is the year-over-year change in median asking rent, which does track with what we were looking at from the Cromford Report. So as a tenant, this is good news for you. Things are getting more affordable and definitely more inventory to choose from. But as a landlord, this is not playing too well in your favor, especially if you are trying to cash flow. So just keep that in mind. We'll have to keep an eye on what's going on in the rental market as well as inventory increases. So check the description below if you want more information about assumable mortgages and how all of that works, or just an instant home value on your home before you decide to get on the market. I will be back next week with another market update.